Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
I'm Kritika Saxena and you're watching CNBC TV18. This is After the Bell. Of action over the next 30 minutes. But first, let's talk about the top story this evening. Spiraling fuel prices continue to dominate the headlines today as well. Last evening, we told you that the government is mulling a comprehensive plan to douse the fuel fire. Now, top government officials are telling us the decision on some relief measures is expected during this week. Sapna Das is here with exclusive details. Sapna, what are you picking up now? How is the government looking at the situation and what kind of strategy is it likely to adopt to tackle the fuel price surge?
A clear view, at least in some of the quarters of North Block, is the fact that probably the way the oil prices have risen, or rather the retail prices have risen in the domestic market, is nothing short of a crisis situation. And consumers are expecting relief from the government. Having said that, they're also indicating that probably measures will have to be taken together because the rise in the crude prices has been coupled with the fall in the rupee, and this has created a kind of a double whammy impact. Having said that, however, in terms of the key question of excise duty relief, they're very clear that the fiscal impact will have to be kept in mind, and probably this is going to be the view of the revenue officials. The fact that right in the early of the financial year, can the government afford to take a hit of anywhere between 13,000 crores to 26,000 crores, depending on how much the quantum of the cut is and at what time it comes about, if at all. Officials are also very clear that if there is any movement that is likely on the excise duty front, it will have to be accompanied by a kind of a relief on the VAT decrease also by the state government. So now that again is a bit of a question mark. Last but not the least, measures taken together, probably some role will have to be played by the oil marketing companies also in terms of the daily price revisions. This is what we are getting to hear from some of the quarters in North Block. It's a dynamic situation. We have to wait and watch and see what really happens, despite the fact that there are indications that some decision may be likely by this week.
Okay, fair enough, Sapna. We leave it. In fact, talking to us last evening, the convener of BJP's energy cell, Narendra Taneja, said that the government will ensure that the pain due spiraling prices is elevated soon. He added, and I quote, "Now these are political decisions, and when we have to take political decisions, sometimes we can take decisions within 60 seconds. Here's what he said.
The government is going to do everything possible in order to make sure the benefits are available to the people and the pain that people are suffering today is reduced to the extent the government can afford to do it. But one thing is very clear at the same time, reforms will continue, modernization will continue. These decisions are not administrative, these are political decisions, and when we have to take political decisions, sometimes we can take decisions within 60 seconds. So wait and watch.
All right, now the big story from the aviation space and the much anticipated Air India divestment. Less than 10 days to go for the deadline. Government says no airline has bid for Air India yet. Now the last day for submitting bids is the 31st of this month. That's not all. The government may not at all go ahead with the stake sale if they don't get the right price for the Maharaja. Ashpreet Shetty is here with exclusive details. Ashpreet, the aviation secretary has categorically said that the government retains the right to sell or not to sell Air India if the bid process is found to be inadequate. What exactly are you picking up on how they're going to go about this?
Well, it's quite early in the day as far as Air India bids are concerned. But remember, the last day for submitting bids is May 31st. That's the kind of deadline that the government has set. Now, what the Civil Aviation Secretary told me is that they are looking at completing the full process. They are hopeful that by end of 2018, they will be able to go ahead and divest Air India. However, the question remains whether they will get the right price for the Maharaja at all or not. Now, what he also went ahead and said that if they do not get the right price, then they may look at not selling Air India, may have to go for a rebid. Those are options that the government is already considering. Now, remember, Indigo is the only airline which has given a formal expression of interest to the Aviation Ministry. However, as far as other airlines are concerned, even Jet Airways has not given a formal letter to the Aviation Ministry. However, there is, of course, a big chance of them going ahead and bidding by May 31st. Remember, the qualified bidders will be announced by June 15. That is the target the government is looking at. And by August end, they will be announcing the final successful bidder. However, there is a catch that the successful bidder, even if he's the highest bidder, will be announced only after all regulatory approvals got on board. So that's the Air India story that we will be looking at. By 15 June, there will be a big clarity coming in as to which all bidders have gone ahead and said a yes to Air India.
Okay, so we will have to wait till 15 June to have a final say on that. But Ashri, thanks for taking us to an important status check on that story. Now, staying with the aviation sector, here's a big one. Flyers may be in for a big relief very soon. The Aviation Ministry has released the first draft of the air passenger charter today. The charter proposes that flyers be allowed to be able to cancel flight tickets free of charge within 24 hours of booking. Now, this as long as there are at least 4 days left for the scheduled departure. That's not all. The charter, among other measures, also proposes that airlines would have to refund full ticket amount to passengers in case a flight gets delayed by more than 4 hours. Now, the draft will be kept open for public consultation for 30 days. The government expects to notify it by mid-July. Here is what Jansena, the Secretary of State for Aviation, had to say on this.
It's very close to becoming reality. Many of these features are in fact going to be rolled out within the next 30 to 60 days. The idea, of course, is to be able to transform the passenger experience through Air Seva, which is what we're doing. And Air Seva is the umbrella brand, and within the brand are 4 very important elements. One is the passenger charter, which we are strengthening dramatically to strengthen passenger rights, make their travel a lot better, a lot more convenient. Second is Digi Yatra, to provide an all-digital experience as you go through our airports, as you board our flights. Number 3 is the Air Seva app, which we are completely upgrading and releasing in such a way that it becomes even more valuable for passengers. And number 4 is connectivity in the skies.
All right, on to the market action of the day. The Lal Street recovered from the day's lows to snap its 5-day losing streak and ended mildly in the green. The Nifty closed with gains of about 0.125%, ending just shy of that 10,550 mark. Sensex gained about 35 points and ended in the green. The mid-cap index recovered in today's trading session and fared better than the benchmark indices to end about 0.25% higher. The Bank Nifty recovered as well after SBI's numbers, and SBI, of course, rallied almost 4% post its fourth quarter earnings. But here's a special analysis. As the Modi government completes 4 years in office, we decided to take a look at how the markets have fared under this regime. While the Nifty generated returns of over 43%, the broader markets outperformed that index to generate returns of over 70%. In fact, the Indian market has even outperformed its Asian peers. Let's put this into perspective. Anuj Singhal is here to break down the market performance for us. Anuj, Indian markets have done exceedingly well over the last 4 years, very clearly.
Well, the markets have given the Modi government a thumbs up. In fact, that's been markets' preferred scenario. And if you look at the performance of Indian markets over the last 4 years under the Modi regime, it's up about 43% for the year on the Nifty and about 70% for the Bank Nifty. Mid-cap index up 81%. It's actually better if you compare it from the November 2013 period. And I'm taking that period because the market had priced in Narendra Modi coming to power somewhere around November 2013, and that's where the Modi rally had started. So the actual performance is even more, 67%, 110% and 125% for the major indices. How does that compare to the Asian peers? Well, the 2 big peers that we have, Hang Seng and Kospi, in the same period have underperformed. They've also gone up, but clearly not as much as the Indian markets have. One key feature about Indian market rally over the last 4 years has been that it's been all about domestic stories. Bajaj Finance is up nearly 1,000%. Bajaj Finserv up about 560%. Eicher Motors up about 300%. Maruti up 250%. And IndusInd Bank up about 250%. All of these companies cater to the domestic demand. On the other hand, the global picture has looked a bit murky, and the top losers reflect that. Tata Motors, ONGC, Sun Pharma, Lupin, Dr. Reddy's, all of them actually down in this period. Also, what's interesting is that some of PM Modi's pet schemes, there the stocks have done well. He wanted to back, for example, Housing for All, Canfin Homes up 435%, Group Finance up nearly 300%. You wanted to back Swachh Bharat Abhiyan, build more toilets. Companies in that space have done well. Somani, Cera Ceramics, both these have been more than doublers over the last 4 years. Namami Gange scheme, ITD cementation has been a 6-bagger in that period. Also, what's been interesting in the Narendra Modi era is the FI and DI inflows. Now, this is till November 8, 2016. Why was that date important? The demonetization date. Before that, FI has bought 22,000 crores, DI has bought 75,000 crores. Look at what happens after that. quite a bit of withdrawal from FIIs, almost 91,000 crore, and still the market had the biggest rally, and that's because the DIIs pumped in money, 1.5 lakh crores. So one big advantage of DII, of demonetization, of course, was that a lot of money was channeled into financial assets, and that's where the market also benefited. Net, it's been a good period over the last 4 years.
Okay, the numbers say it all. Thanks, Anuj, for taking us to the detailed analysis. Shift focus to the insurance sector. The upcoming board meeting of the insurance regulator will be crucial for various insurance segments and particularly for the reinsurance space. We understand that IRDA may move towards giving a level playing field to foreign reinsurance branches against state-run GIC RE. Yashen is here with that report. Yash, put this into perspective. What exactly does this mean for GIC RE?
Well, absolutely. The upcoming board meeting of the insurance regulator will be very crucial for GIC RE, and here's why. What we're given to understand is that the board of the insurance regulator is likely to consider the recommendations which were submitted by the reinsurance expert committee. Remember, these recommendations from the reinsurance expert committee essentially suggest a removal of the preference order or the order of preference in the reinsurance space, which at the moment give an edge to GIC RE over the other FRBs or foreign reinsurance branches as far as acquiring any sort of business in the reinsurance space is concerned. Now, before we move forward, let's just understand what the order of preference really means. So currently, under the current mechanism, any insurer who wants to reinsure any particular policy has to submit that policy with GIC RE as well as 3 foreign reinsurance branches. Once a quote on that particular policy is received from the foreign reinsurance branches, that has to be disclosed mandatorily to GIC RE, which is then given a chance to match the best quote or the best bid. In this situation, most of the times GIC RE matches the best bid and takes the business, whereas the foreign reinsurance branches, despite giving a more attractive offer in the first go, lose out RE, which is then given a chance to match the best quote or the best bid. In this situation, most of the times GIC RE matches the best bid and takes the business, whereas the foreign reinsurance branches, despite giving a more attractive offer in the first go, lose out on the business. But when we are talking about this new proposal, and if that is approved, then the insurer will have the freedom to go to any reinsurance company and really select the best bid in the first go itself by bypassing GIC RE in this entire process. So that's the kind of change which we are talking about. But do remember, this particular order or the proposal is not a blanket proposal. It will only cover certain segments, and these segments include agriculture, large infra projects, marine, aviation, life insurance. I've also given the respective individual premium which GIC RE collects from these individual segments. Of course, goes without saying that these segments are the most lucrative segments for GIC RE, and if you look at the total premium collection from these segments, it comes up to 13,131 crore out of the net premium collection of over 30,000 crore, which is a significant 43% of GIC's premium collection. I am not suggesting at all that the entire 43% or that 13,000 figure will get impacted, but yes, there will be a significant impact which will be felt as far as the premium collection is concerned for GIC RE if this proposal goes through.
Okay, Yash, thanks for explaining that. But let's talk about the big earnings of the day. Our State Bank of India, of course, the bank has reported a second consecutive quarterly loss, mainly due to a surge in provision. The bank's fresh slippages rose about 30% sequentially, but the stock gained nearly 4% after the bank's MD says that all bad assets have been recognized. Lata Venkatesh is here with the key takeaways. Lata, what are the main highlights? On a closer look, it looks like the numbers aren't as bad as we had initially expected.
Well, I'm concentrating only on the asset quality or the slippages into NPA because at the moment losses of 7,000 crore are immaterial. We just have to see whether the slippages will decline. Now, what they told us initially is that they had several loans under the strategic debt restructuring, structured asset restructuring, 525, various programs of restructuring, but they were treated as standard assets. That total for SBI was 50,000 crores, and the expectation was that most of the NPAs will come from there. What the bank told us, which was troubling, is that only 18,000 crore of that has been recognized as NPAs. So we got worried, but the bank said that of this 50,000, 18,000 recognized, 25,000 is put under watch. That is their new watch list, and then the remaining about 6,000 crore they don't expect is going to slip. Okay, Now the next problem for the market is, if 18,000 crore has come from this watch list, your total NPA is 33,000 crore. That means you have a large number of NPAs from outside the watch list. That doesn't seem so bad. You know, the non-watch list slippages is about 15,000 crore. Of this, the corporate slippages are about 11,000 crore. Now, so should we expect that, you know, you will get 11,000 crore of slippages every month, every quarter? One may not be the case, because of this 11,000 crore, there is one large telecom company. I mean, we all know Relcom. That's 7,000 crore. So the actual slippage has only been about 4,000 crore from the non-watch list. And then the remaining are retail slippages, about 4,000 crore. So now let us come to what is the expectation hereafter. It appears that on a quarterly basis, the bank can give, you know, about 3,000 crore of corporate slippages and about 3,000 crore of non-corporate slippage, you know, retail slippages, agri slippages. So about 6,000 crore every quarter will come. Multiply that by 4, annually about 24,000 crore of slippages will come. And then remember the watch list, which 25,000 crore of the old list, of that let us assume 80% will slip. That would be another 20,000 crore. So the total bad loans in FY19 can at best be 45,000 crore. Now that's not a large amount for a bank which has a total book of over 20 lakh crore. Yeah. It works out to about 2% of their book. So therefore, it's possible that the market, which was sitting short, you know, saw a lot of covering and buying of the stock, assuming that, okay, they will keep to their promise of 2% of the book going bad in the current year. And, you know, that explained why you saw this kind of a recovery. Now, it remains to be seen, you know, there could be some demo-related, delayed MSME slippages, and therefore the number may be larger than 44,000 crore. We don't know. At the moment, this 44,000 crore is not scary, because if you looked at the FY18 total slippages, it is 1 lakh crore. Compared to that, 44,000 crore clearly indicates that the worst is over.
Okay, I guess the devil's always in the details. Thanks, Lata, for taking us through that. But speaking of earnings, take your attention to the flashes on your screen. Cipla has reported fourth quarter numbers. They seem largely below expectations, but let's see if there are some details we're missing here. Ekta is here with more. Ekta, if you look at the fine print, what's the reason? It looks like a bad set of numbers.
Well, it's definitely unequivocally a very bad set of numbers for Cipla. The revenue growth has only been around 3.2%. Compare this to an expectation of around 11% and a margin which is coming at 14% versus expectations of 19%. Now, Cipla's margin recovery was something that the street was tracking very closely, simply because of the kind of volatility and fluctuation that we've seen in their margins quarter over quarter. So last quarter it came in at 19%. This quarter it was expected to probably sustain at 19%, and they haven't been able to do that. It's come back to levels of 14%, which is the same thing that they had done same quarter last year. So I don't think that margins are going to go down well with the street. Separately, there is around a 77 crore outflow this quarter, an exceptional outflow which has come through. So that's probably resulted in the profit actually coming lower than expectations. But even adjusted for that, what the street is not going to like is a tepid revenue growth as well as a disappointing margin picture. So that's basically summing up what Cipla has reported. We have Ranjit Kapadia of Centrum Broking joining in to talk about the numbers. Ranjit, over to you then. What have you made of the Cipla numbers, and what's probably the most disappointing thing?
Highly disappointing numbers, because of the top line growth is just 3%. And this, despite the market is growing about, domestic market growing about 9%. They have put a dismal number. Almost 40% revenue comes from the domestic market, and we were expecting good set of numbers, at least in the domestic space. Okay. On the margin front, we are there is a 100 basis point improvement on year-on-year basis. However, on quarter-on-quarter, there is a sharp decline of 580 basis points. So that is also disappointing at the moment. And then there is a provision of 77 crore for the additional provision for NPPA demand, so which was not expected. So that has also come as a negative surprise.
You know,
So
the
overall,
guidance,
great set of
Ranjit,
numbers.
the guidance provided by the company itself was, the company said it's on track to meet its EBITDA guidance, significant part of cost savings to accrue in second half of FY18. So the street on a consensus basis was expecting maybe margins to sustain at least levels that we've seen in the previous quarter, a range of around 17 to 19%. Is that a correct assessment?
Yeah, that is a correct assessment, but the margins have sharply come down. Now we have to see the exact numbers put in perspective, and then we have to see how the things are shaped up.
Okay. All right, Ranjit, we leave it on that note. Thanks very much for joining in with your quick take. Well, Kritika, back to you.
Okay, fair enough. We'll have Ekta back to give us some more detailed analysis of costs. First look, definitely, and as Ekta said, an unequivocally bad set of numbers. Let's take a very short commercial break on that note. On the other side, to the bell now, JDS leader H.D. Kumaraswamy is all set to take oath as the Chief Minister of Karnataka tomorrow. The swearing-in ceremony has also become a rallying point for the federal front, with almost 30 national non-NDA, non-Congress leaders confirming their participation for the event. Rukmini Rao is here with more details. Rukmini, you've been tracking this from day one. Who are attending the ceremony tomorrow? And also, there has been any announcement yet on the number of ministerial berths for the Congress and the JDS? Do we have any clarity on the portfolio? And of course, there seems to be the rise of the probable third front as well.
Well, Congress-backed JDS's Chief Ministerial Designate candidate H.D. Kumaraswamy will be taking oath here in Bengaluru at the Vidhan Sauda at 4 p.m. tomorrow. But very interestingly, we'll be seeing a whole host of leaders from several regional parties in India come to the swearing-in ceremony. What we've been given to understand is that we'll be seeing Aam Aadmi Party's Arvind Kejriwal, Mamata Banerjee, Mayawati, Akhilesh Yadav, Tejasvi Yadav, DMK Stalin, Kamal Hassan, and of course along with Chandrababu Naidu and Congress Party President Rahul Gandhi and Sonia Gandhi, who will all be marking their attendance at this swearing-in ceremony. What we've also understood is that Telangana's Chief Minister KCR will be meeting Kumaraswamy and H.D. Devagowda today, as he won't be able to attend the ceremony tomorrow because of official reasons. But however, political pundits are looking at this as some kind of an emergence of a third front, which could be perhaps looking to take on the BJP in the upcoming Lok Sabha polls. But however, what we've been given to understand in terms of the number of candidates who are going to be sworn in, Kumaraswamy for sure is going to be sworn in, but there is still no clarity as to if there are going to be other candidates who are going to be sworn in, because we do understand that there's still talks on between the Congress and the JDS on several portfolios, and nothing has been kind of finalized till now.
Okay, fair enough. We don't know the details yet, but perhaps by tomorrow we should have some clarity. Of course, Rukmini has been tracking that from day one, and we'll have her back tomorrow as well. And remember that much anticipated swearing-in ceremony.